Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Nick Peters, multi-asset fund manager for Fidelity. Hello, Nick.
Hi.
So you have been taking recently a quite contrarian view. While the rest of your peers are getting concerned about valuations and risk and are actually becoming more cautious, recently you've been adding risk, haven't you?
That's correct. So if we take a step back, after the Trump rally that we saw tail end of last year, beginning of this year, that was the point where I started worrying about the valuations and whether earnings growth would come through. And we obviously had a decent rally. Markets became nervous about geopolitical risk and about valuations. And I just felt that looking at the economic data, actually the picture looks pretty robust. I think earnings growth looks okay. And I felt that analysts are going to start rolling their numbers forward to next year, to 2018. And again, valuations perhaps look a bit more sensible. So that for me was a green light really to add to equities and take a bit more money out of fixed income.
And interestingly, while another of your peers who I've been speaking to recently was adding to their gold position, you've recently been selling gold, haven't you? Which is a real sign of the fact that you are more confident in the market.
Yeah, well, I suppose at the back of my mind was that if I was becoming a bit more confident about the outlook, certainly over the next 3 months or so, then it seemed sensible to reduce the more defensive positions, so fixed income and gold as well.
Well, I suppose that's the beauty of being a multi-asset investor, is that you do have far more levers to pull than a sort of average long-only equity fund manager. Where are you adding risk at the moment? And having said that, where are you seeing those opportunities?
Yeah, so I mean, you're absolutely right. I really enjoy running a multi-asset mandate because there are pockets of value. There's always somewhere where people are selling and you think there's an opportunity. So actually, European equities, again, had a good run at the beginning of the year. Then post Macron's election victory, actually we've seen a period of weakness linked to the strong euro as well. I thought that was a bit overdone. And so where I've added to risk, it's with European equities, because I think the backdrop again is looking pretty good. And valuations it certainly looks cheap relative to the US.
Of course, you do also have a fixed income allocation, and although that is becoming more and more difficult to find value in that particular asset class, is there anywhere in particular that you do like within fixed income?
Yeah, so emerging market debt, local currency, is a position we've held for a while now, and although I have been top slicing, it's still relatively attractive. Global hybrids is another area where Fidelity run a global hybrid strategy. It's a very strong strategy, and I've been happy to add to that in recent times as well.
And I suppose the final question is, how long do you think this confidence will last? Because we're in Q3 now. Q1, you were risk off. Now you're risk on. How long will this run last?
Yeah, I mean, I wouldn't get carried away. Risk on relative to where I was, for sure. And I just think it's a case of waiting to see what develops. But as I say, the backdrop looks reasonable economically and from a corporate perspective. We think that inflation is likely to pick up towards the tail end of the year. And I think that and what happens with the dollar are the two areas we've got to watch closely.
Nick, thank you very much.
Pleasure.
This is Emma Wall from Morningstar. Thank you for watching.